All right, Zero DT Strangles. This is a piece Jacob put together. Jacob is our math geek, our math kind of genius. I can say that because I've never seen anybody successfully challenge him on a math question and win. So until that happens, until somebody can beat the dethrone Jacob Perlman, he is our official math geek. I put him up there in a class of about 5 mathematicians in America. So he's that good. Zero DT Strangles. So zero DT options have given retail traders access to extremely active liquid markets and fast results for their plays. Tony just talked about this a minute ago. Unfortunately, the FINRA regulatory buying power requirement minimum for naked options is the minimum of, and we put is the maximum of what's below. It basically works out to, if you're trading, it's a little less than 20%. Right now, the index is 5,100. What is the requirement for SPX?
I think it's close to 100,000.
100,000?
Close to it.
Yeah, it was about 80 when the index was a little lower, but now it's probably 96,000. That's just for a strangle.
Right.
So it's a little under 20%.
Right.
Like most of the time we say 18%-ish as a ballpark. So if a stock's trading for, $100, it's $18,000.
It's 51, it's 100,000.
Yeah, it's 5,100, it's 100,000. Yeah, nothing, nowhere. That's a lot of money.
It's a lot of money
for a one-lot strangle to make, $100 or $200.
Right.
So
or you're going to collect, $18 in premium or whatever.
Nobody's disagreeing with you.
Yes.
So because this doesn't account for the time remaining on the contract, it makes trading with undefined risk in the zero DTs extremely buying power inefficient. Now, if you have portfolio margin, it will be less, but you need 175.
If you have more positions, it'll be less too.
You need $175,000 in your account minimum to have a portfolio margin. So, and that's not our choice. None of these are our choice. So how can we get around this? How can we allow you to trade your favorite strategies, but not kill you with requirements? Okay, how can we do that, Mr. Batista? How?
Define the risk. Take something and buy a wing that's going to minimize it by 90%.
Buy a wing, he says.
You got to do it on both sides, but sure.
So over the past 20 years, this is really interesting. Over the past 20 years, the SPX has moved open to close by less than 2%, 95% of the time. Less than 5%, 99.6% of the time, and never by more than 11%. Okay, these are just statistics from the last 20 years. So in the SPX, zero DT options have good volume, out well beyond the typical daily moves. Using these to form very wide iron condors will drag down your average P&L by the cost of the wings, usually a nickel to 15 cents on the dailies. The reason the dailies you can buy them cheap is because they expire, so nobody has to take overnight risk.
That's right.
That's why they're available.
They expire.
If you go to try to buy long-term options at a nickel or 15 cents, you're going to go out to levels you can't even believe.
Right.
But on the dailies, they exist. So they behave similar to strangles, but the buying power can be reasonable for a medium-sized account. So now that we have a plan for how to sell strangles in the zero DTs, let's see how successful they would have been over the past year.
Okay.
You ready?
I'm ready.
Let's do it. So we did a study, 51 weeks of data in the zero DTs using data collected every 10 minutes. If you're wondering why we do every 10 minutes, it's just so we can get enough. So we can do these every single week. We examine selling strangles with the market open, either 30, 20, and $10 out of the money, as well as straddles. Considered managing the winners at 10, 15, and 20% and 25% of initial credit. Losers were allowed to expire and for full loss. For this study, there was no rolling of managed positions. Each trader placed exactly one trade per day. This is our big question. We get this all the time. All right, you ready?
I'm ready.
Drum roll. Everything's going to look good, just so you know, because this year has been a gift for these. But if you're doing
the market cooperated, you mean, with its direction?
Yes, if you're doing straddles, and this has, without buying the junky wings, but we're saying you can, it will reduce these numbers. But without buying the junky wings, 10%.
Well, you know what's funny? If you go out $50, you use around $3,000 in buying power after the credit.
That's what they.
I know, but I'm just saying. But that's the conditional value at risk because you're going the expected move. You're buying that wing. You're paying 50 cents, 25 cents on each side, 40 cents on each side to buy the wing. But the conditional value of the ring, because I've done these trades, is around that $3,000 number.
What's
4.
important to note here from straddle selling at the money put and call is, and this with no management, is that the numbers are sequentially just kind of the order you'd think: 91, 88, 86, 83, and the money goes up the other way. Okay, it's as clean, as perfect as you can imagine. Take a little more risk, make a little more money. Let's go to the next slide. If we did $10 wide out of the money strangles, obviously your win percentage is going to go up. Your money still looks pretty good, and your C-bar actually goes down. So the $10 out of the money strangles is actually better to me than the at the money straddles.
Yeah.
Let's go to the next slide.
Yeah, agreed.
When you go $20 out of the money, it starts to get, you don't collect as much money. Your win rates go way up. You're at 95% winners basically across the board, 90 to 95% winners. Your C-bar goes down a little bit, but you don't make as much money. You take less risk. I kind of like that $10 out of the money, but I've been doing them $20 out of the money, and these numbers are pretty much spot on. And then if you go to the $30 out of the money, next slide, Beth. $30 out of the money strangles, everything's over a 95% win. The money you make's a lot less, and the C-bar drops even more. So these numbers it's really just pick your poison, because everything has been so damn good.
It's good and better.
It's good and better.
But that's not going to continue.
It will not
I don't want to
continue.
paint a picture here that this is
But
we found a
keep saying-
strategy that works every time in every market environment.
We keep saying it will not continue, and the crazy
keeps
thing
continuing.
is, it keeps continuing.
Although not today. Today would have been an exception.
Yes. We're going to go to the next slide. So, over the past year, selling naked 0DTE SPX strangles would have been an extremely successful strategy. Unfortunately, due to buying power regulations, it's also impractical. So, using the far out of the money long wings to make strangle-like iron condors can give retail traders the ability to make a wider range of 0DT plays at a small cost to your P&L. Got to knock off, whatever it is, 15, 20, 25 cents off those numbers.
More like 50 cents, but it does away with $97,000 worth of buying power.
Yeah, okay.
I mean,
Amongst these undefined risk 0DT trades, using the further out of the money short strikes resulted in slightly lower average P&L, but significantly less tail risk and a higher percentage of winning trades. Very straightforward, just to put some, kind of fuel out there.